Good afternoon, everyone. I'm Jill Badger, the Small Business Development Center Director here at the Toledo Regional Chamber of Commerce. If you are not familiar with the Small Business Development Center, or the SBDC as we often refer to it, we offer assistance to entrepreneurs in all stages of the business life cycle, whether they are at the beginning of their business endeavor or are looking to grow their existing operations. The SBDC provides no cost one-on-one counseling that is very confidential, centered around the business planning process, including financials, market research, marketing strategies, management, cash flow analysis. Chamber membership is not a requirement to utilize these services. For over 125 years, the Chamber and the SBDC, for over 125 years, the Chamber has been the leading resource for business resources, and the SBDC has been the region's trusted resource for information and business impact. That is no difference, has not been any different during these times. The SBDC has helped as much as we can for PPP and EIDL resources, and it's a large part due to our collaboration with all of our members, such as GBQ.
Brett Clark.
And Brett Clark. Yes, Brett Clark is gracious enough to sit both on the Chamber Board and the TASBA Board. So without his assistance, we probably wouldn't have quite as much help. Right before COVID hit in early 2020, Weber Clark, it was announced that they had joined forces with GBQ and their team of advisors, expanding their footprint and services that they provide. If you are familiar with the team at Weber Clark, you may notice some new additions to the team. By the two teams joining together, it brings depth and experience in the accounting and business consulting space that is unique to our Toledo area. The revitalization of the PPP, or Paycheck Protection loans, and the ability for businesses to obtain a second loan will bring some much needed liquidity and relief to struggling businesses facing uncertain times as we head into colder months. This webinar will provide details about eligibility for PPP2, maximum loan calculations, expanded coverage expenses, NAICS 72 special considerations, and simplified forgiveness for loans over $150,000. I want to thank Dustin and Jeremy at GBQ Partners for being a trusted partner and providing the information you need today. Before we get started, just a few things about our webinar. There will be time at the end of the presentation for questions. Since we are in the webinar format, please use the Q&A functions on your screen to type in your questions. You can enter them as you have them, or your questions could be answered later on. So you can also wait towards the end of the presentation before asking questions. This session is being recorded and will be available on the Chamber's website to rewatch and reference. Please note that the information you will receive today is constantly being revised and updated so that the information is accurate as of today, January 14th at 3 p.m. Finally, for the CPAs on our call, CPE credit is available today. In order to receive Ohio CPE credit, you must attend the entire webinar, as well as complete the evaluation survey with 3 activity code words. You will receive this link after today's presentation. The 3 CPE activity code words are located on 3 random slides throughout the presentation. This survey will end on 1/21/21 at noon, so all surveys must be completed by that time in order to be considered for CPE credit. If you have questions about the CPE credit, you can contact Kyrie Bumpus, Marketing and Events Coordinator at GBQ Holdings if you have any questions regarding CPE. Certificates will be mailed after January 21st. With that, it's my pleasure to introduce our expert presenters today. Dustin Minton is an audit partner with GBQ Partners, working with small to middle market clients, and leads its national restaurant practice. Dustin has been extensively involved in leading the firm's efforts on the Paycheck Protection Program since the program was introduced back in March of 2020. Jeremy Bronson, the Director of Business Advisory Services with GBQ Partners, leads the outsourced accounting and evaluation practice in Toledo. Jeremy has also been extensively involved in leading the firm's efforts on the Paycheck Protection Program since the program was introduced back in March of 2020. Now I'll turn it over to Dustin and Jeremy.
All right. Thank you, Jill. Thank you, Julie. And we're happy to be with you all today. So we're going to jump right into this because we have a lot to cover. So like Jill mentioned at the beginning, we're going to touch on a bunch of different topics. So eligibility, the application process, the timing. I know a lot of people have questions about, when are the banks going to start accepting applications, covered expenses, change in the tax rules. And then, there's some other things around the other SBA programs that were impacted by this latest bill, the EIDL program as well. So lots to cover. So I guess before we get too down the road, just wanted to kind of talk about, the basics of the legislation. So, it feels like forever ago that the PPP was introduced, but, it was March 2020. It hasn't even been a year yet. But that round one of PPP, that closed in August of 2020. And if you can remember, it was not the best rollout, lots of chaos, really, rules changing by the week, by the day. So certainly this round two seems to be going much, much smoother. So it's much better. The one thing with this new legislation, and it wasn't absolutely clear when we first started looking at it. So it's not just about the round two, which we call PPP2. It just reopened the whole PPP program. And so if anybody didn't get a loan, a PPP loan in the first round, you are still eligible and can get a first round loan and be subject to the rules of round one. So we're not going to touch on that one too much, but I just wanted to make sure everybody knew if you did not get a loan under the PPP, under the first round, you can go get a round one loan and it's subject to those rules. So, and they are a little bit different, and we'll talk about what the rules are for round two. And so, the funding for this time around is 400 billion plus. There was about 138 billion left over from round one. And then they added 275 billion in this latest legislation. And if you remember, it was a bit chaotic when, it was kind of first come, first serve in round one, and everybody was scrambling to get their loan. And so, that $350 billion in round one went fast. It went in 2 weeks. And then I believe it was in June or so when they allowed for more funding, and that one did not get depleted right away. So that's why there's 138 billion left from kind of round two of round one. So this is not a new program. This is just an amendment to the CARES and Flexibility Act. One thing to note, though, is that this round two, PP2, does close March 31st, 2021. So that's the entire PPP program. All right. So for those of you that need CPE, this is the first word to write down: legislation. So when you get your evaluation, it'll ask you to write down the 3 words that we give to you throughout the presentation. All right. So in terms of PP2, the big thing about eligibility is, necessity. That was a big topic in the first round. It's still a big topic in the second round because, some businesses have done really well. They have been able to recover. And so, as you go through the application, hopefully everyone has seen the application, you are asked to attest that, it is still necessary for you to that you need this for ongoing operations. So we've written a few articles about this, and we have them linked here, which you'll have access to after the presentation. Back in round one, they came out with the Treasury came out with a statement that basically if you had a loan that was $2 million or under, you were assumed to have met the criteria for uncertainty and necessity. And so those folks didn't really have to worry about, proving that out. The thing with PPP2 is that, loans are maxed out at $2 million. So does that automatically mean that none of them, that the necessity thing has already been determined? We're not quite sure about that. There is a chance that they may lower the bar. So really take the time to figure out, is this necessary for you? The other thing that we're not sure about is, if you got a round one loan of 1.2 million and say you get a 1 million loan in round two, so now you have 2.2 million, does that now make you subject to SBA audit where you're going to automatically be audited? We're not sure. We're not sure if they're going to be looked at separately or if they're going to be looked at collectively. But just, as you go through the application, there is an attestation that you have to make that these are deemed necessary for ongoing operations. So for the PPP2 requirements, here's the big things. So you must have been in business as of February 15th, 2020. So this was the same requirement for PPP1. But you do have to show evidence that you were in business at February 15th, 2020. And they said that, you have to be able to show payroll data to show that you had employees, or if you're self-employed, that you had that going on. So, and if you weren't in business in 2019, but were in business by February 2020, there are special rules on how to compare the quarter over quarter for the 25% reduction. One question that I've gotten here recently, and this is the same, it applied to the first round as well, is if you acquired a business, say after February 15th, 2020, are you eligible to get a PPP loan? The answer is yes. So there are, if you go to FAQ number 38, it does talk about acquired businesses. But the thing with, if you acquired a business after February 15, 2020, it still had to have been in business as of February 15, 2020, if it was under previous ownership. So that question has come up a lot. So I just wanted to pass it on to everyone. The next big factor is, have you experienced a 25% reduction of gross receipts in any one quarter in 2020 versus the same quarter in 2019? There's another option as well. So that's by quarter. And it appears that that is based on calendar quarters. Because we've gotten the questions of, well, can I pick, May, June, July, and then compare that to the same 3 months of the prior year? We don't believe so. We do believe it is calendar quarters. I know like some industries like restaurants work off of a different kind of a fiscal year where, it could be 13 4-week periods or a 4-4-5. Definitely check with your bank just to see what their definition of that is. I would think like if you're a 13 4-week period restaurant, you would pick the 3 4-week periods that most closely aligns to a calendar quarter, because otherwise you would have to kind of reclose the book. So I don't think that's the intention. But in terms of this 25% reduction, and we will talk about what is gross receipts, because there's been a lot of questions around that as well. Again, like if you weren't in business in 2019, but you were open by February 15th, 2020, then there's all kinds of rules of, which quarters that you do the comparison of. So we have those listed there. It does say that gross receipts specifically excludes any amounts received under the CARES Act, so which would include PP1. So if you've already gotten a forgiveness for round one, that does not count in terms of gross receipts. If anyone on here is a 501c6 organization, the new legislation, previously you were not eligible for a PPP loan at all. And so under this new legislation, it did allow you to be eligible so long as you did not have more than 15% of your organization's revenues related to federal lobbying. And so you would be eligible for the first round of PPP. So if anybody like that, and I know, there's a lot of like different industry associations that weren't eligible the first round. So it looks like you are now, but you have to make sure that the 15% is taken care of. The next criteria, you can have no more than 300 employees or meet the alternative size standard. So, if you look at the SBA definition of a small business, and depending on what your NAICS code is, you could be judged based on revenues, or it could be based on employee count. So, and then there is some intangible tests that you can do as well. So if you don't think you meet it just because you have more than 300 employees, make sure you go back to the SBA definition of a small business, because you may still apply. And when they are talking about 300 employees, and again, I know this can get very confusing, they're talking about true headcount. So every person counts as one. This is not an FTE calculation where you're taking some fraction of 40 hours. It's not that at all. It's just every person counts as one. And based on the application, it's the head count at the date of application. So if you apply on Friday for the round 2 of the PPP, what is your head count on Friday? That's how you'll determine the 300 employees. The other thing is the affiliation rules. So no different from last time. Just remember, if you have affiliate entities, you have to take all of those into account to see if you meet the test for the 300 employee test. Similar to PPP1, so like restaurants, gyms, hotels, those that are part of a franchise system, they did get a carve out. So it's based on whether you have less than 300 employees per location. So for the most part, anybody, a lot of franchise systems, restaurants, hotels, like they will be eligible as it relates to the employee count. So you still have to meet the other things, but again, that carve out continues. Last time it was 500 employees, so it has been lowered to 300 employees. But most of these multi-location businesses will likely still be eligible. They have placed some additional restrictions. So lobbying firms and think tanks are not allowed. If your company is owned or has a board member from China or Hong Kong, you are not allowed. And if you received a grant under the Shuttered Venues Operators Program, you are not allowed. All right. And so, when we first were looking at this, we had all these questions, come up, and luckily it seems like the application has answered a lot of these. So one of the questions that came up was, what is the basis of counting? Is it cash basis? Is it accrual basis? And this is for measuring the gross receipts 25% decline. And so in the application, it says it's received or accrued in accordance with the entity's accounting method. So however you typically report, that's the method that you should be using. I wouldn't try to game the system, and if you're typically an accrual basis, but if you decided well, let's see what cash basis looks like, and that's much more favorable, I wouldn't do that. If you're using accrual basis as you're reporting, that's what you should be using. In terms of multiple companies, so, last time, let's just say you had 4 or 5 companies that applied for separate PPP loans, and you plan to do the same thing this time around. And they all have different results in terms of the gross receipts test. And so in this example, company 1 had no decline, it actually increased 25%. Company 2 declined in Q1 and 2 and would have met that criteria. And then company 3 had its best year ever. Well, when you're looking at the gross receipts test, you have to look at all 3 companies together. That's the affiliation. So in this case, we say that the 3 companies are up over 30% year over year. So they would not be eligible. They would not meet that 25% gross receipts reduction or decline. However, if you are a NAICS 72, so restaurants, franchise systems, you most likely some of your companies would still be eligible. So like company 2 in this example would have met the criteria. So if you're not a NAICS 72, you just have to look at it overall. And then the bad, if you have a bad Q1 and 2, but then you rebounded in Q3 or Q4, this is where it gets very gray. How does that play into the necessity question? Because we have seen a lot of companies that, that had this exact circumstance where, towards the end of Q1, it got really bad because that's when everything happened. Q2 was still bad. But then Q3, Q4, you're right back up. Really, your operations are back to 100%. So you have to question, do you really need the loan? So certainly, if you want to talk through any of that stuff, you can contact me or Jeremy. And I think, we put this disclaimer or this statement here at the bottom. Just remember that these are public dollars. They are subject to public record requests, and optics may be important. So if you remember last time, like all of the lists of loans that were published, so it's very possible, you saw the scrutiny that some companies got. So certainly please keep that in mind, and just take necessity seriously. So here's the definition of gross receipts, and we've gotten a lot of questions about this because some companies are just right on the cusp of hitting that 25%, and there are some things that are excluded. But if you look at a typical P&L, a lot of times you're looking at the top line sales. Well, you also have to include those things that are down below in other income. And so that's what's throwing people off. So not only is it your primary revenue, the sale of products or services, which are reduced by returns and allowances, because remember, it's a gross receipts test. So think of it as, what's the cash that you expect in the door? But it does include interest, dividends, investment income, rents, royalties, fees, or commissions. And sometimes those things might have gotten thrown at the bottom into other income or miscellaneous income. The things that it does exclude is, if you had a big net capital gain or loss, like taxes collected for and remitted to taxing authorities. So think of sales taxes there, where you're just kind of the intermediary between the customer and the state. If you've transferred money around between the borrower and affiliates, and anything you might have collected as an agent, those would be excluded. And again, you have to look at, the gross receipts must be aggregated with all of your affiliates to determine eligibility, except for NAICS 72. So hopefully that makes sense. If you go to the application, I believe it's on page 4 or 5, it goes into great detail as to what is included in gross receipts. And so take a look at that as you do your calculation. So one of the stipulations in when you read the application, you have to attest to this. There's really, as far as I can tell, there's no requirement for you to prove this, but you must have used or will use the PPP1 loan on or before the expected date of PPP2 being dispersed to the borrower. So, and for the most part, if you're through your 24-week period, which most people should be if that's what they selected, you've had enough payroll and rents and those other things to say that you've been able to use it. Now, you may have had a separate bank account where you had put the PPP money and you didn't touch it. Effectively, you did use it. I mean, it's just kind of what fund did you take it out of? But that's just something you have to attest to. You have to say that, yes, I did use the first round of the PPP loan before taking the second round. The other big question we get is, should you have had to apply for forgiveness or have received forgiveness of round 1 before you get PPP2? And the question is no, you do not have had to have applied or been forgiven to get PPP2. There is a caveat on PPP2 with the SBA if it's under their review, but Jeremy will talk about that here in a little bit. Another thing that it allowed was in the first round for PPP, there were some people that, everyone was scaring to get this loan, that they made errors in their calculation, and maybe they didn't get enough of the round one that they were eligible for. And so this bill did allow them to go back to your PPP1 loan and adjust it. So if you maybe are eligible for more, or say you returned your first round loan, but now you need it, you can go back and reapply for round one loan. If you returned a portion of it because you didn't think you needed all of it, you can do the same thing. So definitely some nice things to kind of true up if you took that position last time. In terms of the maximum loan calculation, so basically, you take your average total monthly payroll and multiply it by 2.5 times. So same as last time, except for NAICS 72, which this is the restaurant and accommodation industries. They are allowed to use 3.5 times. In this maximum loan amount, so it's the greater of 2.5 times your payroll or $2 million. So no loan over $2 million. And then that next bullet there is basically, say you have 5 entities that are applying for the loan. Those 5 entities loans cannot be more than $4 million. So you couldn't get $2 million for each of those 5, that would equal 10 million. No, it's capped at $4 million. So just like in the first round, you were able to get up to $10 million for each loan, and then it was capped at $20 million for a single corporate group limit. So kind of the same comparison is going on here. In terms of the monthly payroll and of the options to do it, so there's 3 options. You can use a trailing 12 months of the date that you plan to apply. So as of right now, nobody would be using January 21. So you'd use calendar year 2019 or calendar year 2020. And for seasonal employers, there are alternative calculations, and that goes into great detail in the application as to how that can be calculated. But for the most part, we think most people are going to be using 2019. So 2019, if you've been hurt by this pandemic, which most businesses have, your 2020 payroll probably isn't as high as 2019. So you'll want to use 2019. And if you already used calendar 2019 for your first round PPP, you can just go with that again. And if you're using the same bank, they already have that documentation, and they shouldn't request the information again. One caveat with 2019 is that they did expand the definition of payroll, where it includes some other types of insurance, but it may not be enough to change what you want to do. So we'll go through that in a minute. The other thing that they were very specific on is, so if you do your calculation and you're using the 3.5 times for NAICS 72, you have to be able to prove that you truly are a NAICS 72. And so that is based on your most recent IRS income tax return. And we've gotten a lot of questions on this one as well, because, there's some restaurant companies out there that have, they have a manufacturing arm, they have a merchandise arm. Sometimes it's a brewery or distillery. And so, maybe they've elected a different NAICS code. And I looked into this a little bit more, and the NAICS code is self-assigned. It's not like the IRS gave it to you. But what it does say is that your NAICS code is based on your primary activity of revenue generation. So if your restaurant operations or your hotel operations are your key or your major revenue generator, then you probably should be a NAICS 72. And if your tax return says something different, talk to your tax provider to see if you can amend your 2019 tax return so it does say NAICS 72. All right, we'll talk about health insurance in a minute. In terms of expanded coverage expenses, so payroll expenses is pretty much the exact same as round one. The only thing is, like I said, on the health insurance, it now includes group life, disability, vision, and dental. So again, take a look to see how much you spent on that. It may not be worth the effort to go and redo everything if it's only going to be a couple $1,000, but just know that they did expand the definition of insurance. In terms of the non-payroll expenses, so these stayed the same. It's rent, utilities, mortgage interest, and transportation costs. And then they added some new categories. So in terms of operation expenditures, it seems like basically any kind of business software or Cloud9 computing service that you use, any of those expenses related to that could be used for forgiveness. They also included property damage costs. And so this relates to, it seems like forever ago, but back in, I think it was June 2020, there was a lot of protests going on, and some of that turned into vandalism or looting. So if your insurance company didn't cover that, whatever cost you incurred to get your property back up to where it needed to be, that would fall under the property damage costs and be eligible for forgiveness. And then supplier costs, this seems kind of all encompassing. Basically, anything that falls into cost of sales seems to be in play here. The big thing, just remember, like in terms of documentation, because when you ask for forgiveness of round 2, you will have to provide documentation, is that you'll have to provide a contract, an order, or purchase order to meet the criteria. And one good thing about these expanded coverages is that they apply to both PPP1 and PPP2. So if round 1 you haven't had enough expenses to get full forgiveness, these additional expenses might give you enough to get 100%. The other category is worker protection expenditures. So this is all the things that you might have had to do to comply with social distancing, sanitation. So certainly like in the restaurant industry, a lot of folks, if they didn't already have a drive-through, they decided to add a drive-through. A lot of them are adding outdoor tents, so those tents would fall into play. A lot of them are doing, filtration systems, health screening capabilities. So anything that you did that was specific to social distancing or sanitation, most likely those expenses would fall under these forgivable expenses. So we talked about how it can be retroactive. The 60-40 rule still applies. So just remember, like in round 1, whatever you submit for forgiveness, 60% of that has to be payroll cost, at least 60%. You can use 100% of it for payroll, but at least 60% of it has to be payroll. And the cover period, so this is nice because this was a big, this caused a lot of chaos in the round 1, but you can choose a cover period anywhere from 8 weeks up to 24 weeks. And that origination date is the date of your funding. So it gives you a lot more time to plan how you're going to spend that money. This is the second CPE word, covered. So all you CPAs, write that down. All right, and then this is my final slide. So for NAICS 72, so remember this is for restaurant, lodging, food services. A lot of carve outs were made for these industries that were hardest hit. So again, they're allowed 3.5 times average payroll. I think a lot of them were able to apply at separate EIN numbers, and so this $4 million max loan cap is going to apply. 300 employees is measured by location. The affiliation rules don't apply. And, one thing that came up, I've been talking to some clients, when they're trying to calculate their gross receipts reduction, one might think you needed to use gross sales, but you really should be using net sales because net sales is reflective of your comps and discounts. So just remember, like gross receipts is really cash in the door and net sales is more comparable to cash in the door. So. All right, I will turn it over to Jeremy.
Hey, thank you, Dustin. So first thing here, there isn't anything new here, but how does PPP2 apply to self-employed and contractors? Really, there's no significant changes from the first round, but I did want to quickly review. This is probably the area from the first round where I saw, wasn't done correctly, and a lot of times, business owners left some money on the table. We've listed out the requirements here in order to file if you are self-employed or a contractor. So the first thing, you're in operation as of February 15th, 2020. You're self-employed, and the principal place of business was in the United States, and you will file a Schedule C. The actual calculations, probably where I saw the most errors, specifically related to the profit from the business. So if you did not have any employees, you would take your Schedule C, the profit from line 31, divide that by, you can take the profit up to $100,000, divide it by 12, and then multiply that times a factor. So either 2.5 or 3.5, depending on what industry you're in. If you do have employees, then you would take the calculation from up above, and then also go through the normal calculation for the average monthly payroll for your employees. So take the total payroll for the year, divide that by 12, and then apply whatever factor that you have according to the industry that you're in. So either 2.5 or 3.5. Next slide. Late last week, the SBA released information on the application process for PPP round 2. There's 2 forms, one for first-time filers and another for second-time filers. So first-time filers would file Form 2483. The form is very similar to the first round of PPP loans. If you're a second-time filer, you would complete Form 2483 SD. Again, this form is very similar to round 1, but it does ask for some additional information. There's a section on the form that specifically asks about gross receipts. So it asks which quarters you're going to compare. So for instance, quarter 2, 2019 versus quarter 2, 2020. And then it actually does ask for what those gross receipts were for the period. It then goes on to ask what your PPP round 1 loan number was. And then it also asks for your NAICS code as well. Obviously, that's the driver that determines whether you use a 2.5 times factor or 3.5 times factor. A couple additional points to clarify. So the number of employees is based on the head count at the time of application. And then it does also include the additional covered costs that Dustin just mentioned. Next slide. So when can you start filing? The SBA opened up its portal this last Monday for smaller community banks to start applying for first-time filers. Those same community banks could then, the filing period opened up yesterday for second-time filers. Tomorrow, the portal opens up for lenders with assets under 1 billion. And that applies to both first-time filers and second-time filers. Then by the 19th, the portal will be available to everyone to start filing. As Dustin mentioned, we'd recommend, start getting your documents around and apply as soon as possible. We don't think it's going to be like it was the first round, everybody running to the bank, but we would recommend, obviously getting those applications completed as soon as possible and get them submitted to your lender.
I was just going to add, just because the SBA portal is open may not mean your bank is actually accepting applications. So definitely check with your bank to see if they're on target with these dates.
Yep. All right, next slide. Perfect. So what are the next steps? Again, as mentioned, the last day to apply is March 31st, 2021. But before then, and if your lender isn't accepting applications yet, there's definitely some things that you can do to prepare. So one of those things is, look at which payroll period is going to maximize your loan. So there's a couple of different periods that you can look at. Obviously 2019 payroll, 2020 payroll, or looking at the trailing 12 months. So which of those periods is going to maximize the amount of the potential loan. Review your calculations from the first round if you did them. So, they expanded the definition on health insurance. So did you include all those costs such as dental and vision, and is it worth including those in the second round here? If applying for the first time or applying with a different bank or the amounts have changed, you'll want to start gathering up those supporting documents so you have them ready to submit as well. And then you will need to provide proof that gross receipts declined by 25%. Depending on how much the actual loan is, drives when you actually need to provide that support. So for loans under $150,000, you'll have to provide supporting documentation at time of forgiveness, but anything above $150,000, you do need to provide the gross receipts support at the time of the application. And then we've defined what would be acceptable support for gross receipts. Next slide. So what happens if your first loan's still under review by the SBA? You can still apply, but the actual disbursement of funds may be held up. The SBA did say that they would set aside available funds to fund the second round of PPP for those unresolved loans. But again, if you haven't applied for forgiveness for the first round and you've used all the money, obviously, submit that loan forgiveness application as soon as possible. And then we would also, recommend reaching out to your lender to make sure that they are participating in the second round. We have heard that some lenders are not that participated in the first round aren't doing the second round. So obviously you just want to make sure that if you do want to apply for the second one, you do have a lender that you can go through. Next slide. Taxability of PPP money. So the big question heading into the end of the year, into 2020, was, do I have to pay taxes on the money I received from PPP loans? The answer is now, fortunately, no. So before the bill was passed in late 2020, any expenses paid for with PPP money were going to be non-deductible. So when we were going through tax planning here in November and December, PPP money was creating some taxes due, even though the company may have been showing a loss for the year. So now that the bill has been signed, those expenses are now deductible. So obviously that was a nice little Christmas present here at the end of the year, and helps a great deal with cash flow. So Q4 2020 estimates are due January 15th, so tomorrow. Hopefully you've talked with your tax advisor before now, and you've got everything squared away heading into tax season here. Next slide. All right, other provisions of interest. All right, loans under 150,000 now have a simplified process. There was a lot of talk for a while that there was going to be a simplified process coming out. The SBA did issue Form 3508S for loans under 50,000. But after that form was issued, we weren't quite sure if anything else was going to happen. But when the new bill was signed, there is going to now be a simplified one-page form. The Treasury has 24 days to release the form. So 24 days from when the bill was signed, it's probably sometime next week or the end of the month that form will come out. The form is going to ask 3 questions. So obviously it's going to be pretty simple compared to what the loan application currently looks like. It's going to ask how many employees was the business able to retain as a result of the loan? What was the estimated amount of the loan spent on payroll cost? And then what was the total value of the loan? The borrower will have to certify the application. And then at this time, it doesn't look like any additional documentation, any sort of supporting documentation is going to need to be actually submitted with the form. But it does say that, records such as payroll records should be retained for at least 4 years. So keep that in mind. Next slide. All right, the SBA is now required to provide transparency on the audit process. So this is, relevant to businesses that receive loans that were greater than $2 million. This is obviously a good thing. The SBA issued forms 3509 and 3510. I think it was around the November timeframe where they released this form asking for, various questions about the business, the liquidity, things like that. It, got obviously made a lot of business owners, nervous surrounding the good faith certification and things like that. So within the 45 days when the bill was signed, the SBA is required to submit their audit plan that details out the policies and procedures of the SBA for conducting reviews and audits. It's also required to provide transparency around the metrics that it's going to use to determine how businesses are going to be audited. From there, the SBA will then have ongoing reporting obligations. And then, so, for those of you that might have received loans over 2 million, you might want to wait here until the end of the month, beginning of February, to submit your loan applications, just so you can see, what they're going to be looking for, how they're going to, pick which businesses they're going to audit, things of that nature. Next slide. All right, another change is the employee retention credit. So originally, businesses that received a PPP loan were not eligible to receive the employee retention credit. This is now changed. So there are certain eligibility requirements that do need to be met. And those requirements are different for 2020 versus 2021. Only payroll costs paid for not using PPP money are eligible for the credit. So in order to be eligible for 2020, business operations either had to be fully or suspended or partially suspended due to government order, or the business had a 50% decline in gross receipts during the calendar year of 2020 compared to 2019. So, if your business might have been deemed essential, this may be a tough requirement to meet. Then for 2021, the percent of gross receipts is then decreased to 20% rather than the 50% for 2020. Next slide. All right, so for 2020, businesses can claim the credit from March 12th, 2020 until the end of the year. If any of the the payroll or the wages paid are eligible, you may need to work with your payroll company to file an amended 941. And then for 2021, the credit is extended through the first half of the year. This may change how you complete your PPP forgiveness application. So a lot of companies that we've worked with to do applications, we were showing 100% of the payroll costs on the forgiveness form. This may not be the right strategy, just because the credits only applied to wages not covered under the PPP loan. So in this case, you may only want to show that 60% of your payroll costs were used for under the PPP money, and then use the other 40% of the expenses to show that the funds were used on those. We actually do have more GBQ has more information coming out on this next week towards the end of the presentation here. There's a link. We are doing a webinar specifically on this topic, so I'd invite you to join that. Sarah Goldhart in our office is our subject matter expert, and she'll be doing that webinar. Next slide. All right, a quick update on EIDL loans here. So the $10,000 grants are now tax-free and will not reduce PPP loan forgiveness. So on the forms that are out currently for the forgiveness, the amount of the loan that's forgiven is reduced by any sort of grant that was received. So that has since changed. The EIDL program has also reopened. There's two different programs here to be aware of. The first is the program specifically related to the EIDL Advance program, which is capped at $10,000 and is forgivable, as I just mentioned. So the program is based on the number of employees multiplied by 1,000, again, capped at $10,000. You can start applying for these advances here January 17th, so early next week. But there are certain restrictions that are outlined. So the business is in a low income community, economic loss of greater than 30%. So that's different from the gross receipts test, which is for the PPP loan, which is 25%. And then no more than 300 employees. So if you did not get the advance first time around, you can apply again. Or if you didn't receive the full amount of the $10,000, you can also apply again and apply for the difference. Next slide.
Jeremy, just one thing to add, the $10,000, if you've already gotten SBA forgiveness and that $10,000 was deducted, that should get remedied through your lender. So just make sure you check back with your lender to see when that $10,000 will come back to you.
Perfect. All right, and then the other EIDL program here, so you can apply up to a maximum of $150,000 loan through the SBA. This is similar to the previous program that came out when COVID hit. So loans are 30-year loans at 3.75% interest, 2.75 for nonprofits, and then you're eligible if your business has less than 500 employees and you intend to use the money to either meet financial obligations or other operating expenses. Next slide. All right, lastly, before we get to questions, the SBA debt relief program has been extended. So principal and interest payments on SBA loans will receive an additional 3 months of relief starting in February 2021. One thing to point out here is at this time, we're considering these as cancellation of debt. So we do think, any loan payments that the SBA does pay on your behalf are going to be taxable. So just keep that in mind. The payments are going to be capped at $9,000 per month. After the 3-month period mentioned above, businesses considered as hardest hit will receive an additional 5 months of relief, again capped at the $9,000. The guidance lists out all the NAICS codes for companies that are eligible. Restaurants are specifically one of them. And then any new loans made after February 1st are also eligible for the relief. So if you have an SBA loan, I would encourage you to reach out to your banker to see how you might qualify for this program. Next slide. All right, and then we've got the last polling code word for CPE, expansion. All right, and we are running short on time here, so we got about 3 minutes here. So if there are any questions. Let's see here.
I think what we should do is we'll look at all the questions and we will respond to each and every one of you.
It looks like we had a couple of questions come into the chat and a few come
Okay.
into the Q&A. So
just,
if you wanted to address any of those now, or again, maybe.
yeah, if there's only a few, yeah, go ahead.
So the first ones that came into the chat are 501c6 organizations subject to the 25% reduction of gross eligibility.
I don't believe so, because they weren't eligible for the first round, but now they are eligible for first round, and that did not apply to first round.
Okay. The second one in the chat, do excluded receipts under the CARES Act also exclude the CARES Act grants? Specifically, CARES Act victim service grants from Ohio Attorney General.
I'll have to go back and look at that one.
I don't know the answer on that. I know it specifically says it excludes PPP money received, but I don't know specifically on that grant.
Next, do we exclude PPP1 funds from the 2020 income, even if it hasn't been officially forgiven yet?
I'm assuming they mean for the gross receipts reduction calculation. Yes, it is excluded.
Would gross receipts include Ohio BWC rebate checks issued this year?
We don't believe so. We see that as a refund of what you've paid in.
Can fiscal quarters be used to determine if you are 25% lower in revenue instead of calendar quarters?
We're using
Go ahead.
calendar quarters, so January to March, April to June. So that's
Yeah, I
how-
touched on this a little bit, like, because restaurants, they use 13 4-week periods, so it's not going to line up exactly to calendar quarters. So definitely reach out to your banker, because it seems like you should be able to pick, the periods that most closely align to the quarter. But again, check with your banker.
When figuring our payroll costs, do we figure in insurance per month or just the payroll?
So you would take when you're doing the max loan calculation, you take your payroll for the year, your insurance for the year, and then divide by 12, and then multiply that by 2.5 or 3.5.
What qualifies as low income community under EIDL?
There is a definition, and if you saw, I had a hyperlink to an FAQ in there. And so that FAQ will have that information. So we'll make sure the PDF of these slides is the hyperlink works for you.
Yep, and just so everybody knows, the recording of this presentation, the slides, and Jeremy and Dustin, if you want to send me the link to the seminar you're hosting next week, all of that will be sent out to all of the attendees, probably by tomorrow, mid-morning, early afternoon. So they'll all see it in their inbox then. So.
Okay.
Just a couple more questions. How do I get more information on how churches can use the PPP2 funds? Does forgivable mean that they do not have to be paid back?
Churches, assuming I looked this up last night, I believe most churches are 501c3s, so you should be eligible. What was the second part of the question?
Does forgivable mean that they do not have to be paid back?
That is correct, so long as you use it for 60% on payroll, at least 60% on payroll, and then 40% on the other eligible expenses.
And then it looks like, oh, nope, a couple more coming in. I started my business in 2019, so it was a slow start as far as income. Income did increase in 2020, but decreased at the end of 2020. How can I compare those quarters?
It on the application, it is very specific as to that circumstances. So certainly I can talk to that person individually, or they can take a look at the application, and it does say like what quarters to compare.
Okay, I'm making note of that. Are 501c4 entities eligible for the second round of PPP?
I would have to check. I'm not sure. That one doesn't ring a bell. It doesn't sound familiar. Do you know, Jeremy?
I do not know. No.
If we have not applied for forgiveness on PPP1, can we still apply for PPP2?
Yes, you can still apply. So I would say get your application in. If the disbursement of funds might be held up, but I would say at least get your application in.
Cash receipts, if I understand you correctly, the 25% of gross receipts must follow the accounting method of how the company recognizes revenue.
Correct.
Okay. What is the definition of low income community? It sounds like that's in that link that folks will be able to get when they get the presentation tomorrow.
Yeah.
Where can I get the PPP2 application?
So I would talk with your lender that you plan on applying for the loan through. Also, if you go out and I'm trying to find 24, if you just Google form 2483, it'll take you to a link to the SBA and the forms available there as well.
Mm-hmm. And all of these articles that we have listed here are hyperlinks, and there's hyperlinks within the articles to all of the SBA forms.
So that'll be that when you get that presentation tomorrow will be a good resource for a lot of these things. Thanks for making that available for everybody. In a self-employed Schedule C situation with one employee, how many employees, in quotes, are head counted, 1 or 2?
I would put, so when you do the forgiveness application, there's a specific line that asks for owner's compensation that's separate from others' employees' compensation. So I would say 1, you would list, 1 employee.
And it looks like one last question here. If I can understand, okay, can an LLC that pays its 2 managers that manage real estate $120,000 annually in a lump sum be eligible for a loan? They pay cash to a few workers about $2,000 each. That might be something you need to speak directly, but if you have that answer, that would be great.
It would have to go through payroll. If they're paid as contractors, then they would not be. If they're paid as contractors on a 1099, then you would not be eligible to get a loan for them. They would have to go get their own PPP loan.
And just on that max loan calculation, when you're doing payroll, I forgot to mention this before, but it's only up to salaries of $100,000. So anything in excess of $100,000 would be excluded from that max loan calculation, just like in round 1.
Guys, one more question came in and we'll go ahead and handle this one, but I know in interest of everybody's time, we're about 5 minutes over. So if it's okay with you, we'll do this last question.
Sure.
I am a 501c3. We receive a restricted donation specific to salaries. Would I have to take that amount out of our calculations of annual salary costs?
Can you say it one more time?
I'm a 501c3. We receive a restricted donation specific to salaries. would I have to take that amount out of our calculations of annual salary costs?
I don't believe so. I don't think that would have any impact on that.
Well, once again, Jeremy and Dustin and Brett for helping us to set this up. Thank you so much for the information. Again, everybody on the call, it has been recorded. Tomorrow, sometime late afternoon or late morning, early afternoon, we'll go ahead and send the link to the presentation so that you can watch it again for reference or a reminder. It will have all the contact information in it of our presenters. We'll try to get that link in there of the webinar that that's being put on next week, as well as the deck that we use for the presentation with all the hyperlinks in it. So again, thank you for tuning in with us, and best of luck to you. And again, Jeremy, Dustin, and Brett, thank you so much for your partnership with the Chamber and the SBDC.
Absolutely. Thank you, everyone.
Thanks.
Thank you.